Imagine waking up and realizing your next paycheck might not arrive. Federal offices closed, national parks shut, thousands of workers furloughed overnight. But here's the real shock. This isn't just about government employees. A U.S. government shutdown can shake every corner of the economy, from your mortgage rates to your retirement fund. So today we'll break down exactly what's happening, why it matters, and, most importantly, how you can protect your money from the chaos. Welcome to Asset Bloom, where we make complex finance simple, powerful, and actionable. The United States government is once again on the edge of a shutdown, meaning Congress can't agree on how to fund federal operations. The White House has warned of possible mass layoffs for federal workers, while agencies prepare to halt non-essential services. This time, the timing couldn't be worse. The economy is already slowing, inflation remains sticky, and recession probabilities are climbing, with some analysts estimating a 90% chance of economic contraction in 2025. But here's what most people don't realize. A government shutdown doesn't just stop federal paychecks. It can trigger a chain reaction that hits your investments, retirement accounts, and even the job market. The immediate impact on jobs and paychecks: empty government offices, closed signs, families budgeting at home. When the government shuts down, roughly 2 million federal employees and 1.3 million military personnel face delayed pay. That means lower spending in local economies, especially in cities like Washington, D.C. or Virginia, where government jobs are a backbone. Contractors and small businesses that rely on government projects often face cancellations, late payments, and in some cases, layoffs. And when consumer spending slows, retail, travel, and real estate feel the ripple effect. Effects on stock market and investments. Stock market charts fluctuating, anxious investors on screens. Historically, government shutdowns cause short-term volatility in the stock market. During the 2018-2019 shutdown, the S&P 500 dropped 2.7% in a single week. But here's the twist. The market usually rebounds once the shutdown ends. However, uncertainty hurts investor confidence, especially when combined with global instability and inflation pressures. Investors tend to shift towards safe assets like treasury bonds, gold, or stable dividend-paying stocks. So, if you're managing your portfolio, this is the time to review your asset allocation, ensure diversification, and avoid emotional selling. How it affects mortgages, interest rates, and debt. Families looking at homes, interest rate graph rising, Federal Reserve building. Here's a surprising connection. A government shutdown can also impact mortgage rates and interest rates indirectly. When the government halts, data releases like employment and inflation numbers are delayed, and the Federal Reserve depends on that data to decide rate moves. That uncertainty makes banks and lenders cautious, often leading to temporary rate spikes or tighter lending conditions. For example, during the 2013 shutdown, average mortgage rates rose 0.25% within weeks. So if you're planning to refinance or buy a home, be prepared for short-term instability. Impact on retirement and savings. 401k dashboard, retirees at home, inflation graphics overlay. For retirees and savers, a government shutdown can mean temporary turbulence in markets, but it also raises deeper questions about fiscal health. Social Security checks usually continue, but new applications or claims may be delayed. More importantly, the shutdown underscores a growing concern: America's rising national debt, which recently crossed $35 trillion. If confidence in U.S. fiscal management weakens, it can pressure the U.S. dollar and make imported goods more expensive, adding to inflation. For your retirement, that means real purchasing power could drop, even if your account balance looks stable. What you can do to protect yourself. Confident person budgeting, using financial apps, diverse investment visuals. So what can you do right now? Build a 3-month emergency fund so you're not dependent on a single paycheck. Diversify your investments. Mix stocks, bonds, and possibly inflation-protected securities. Avoid panic selling. Short-term dips are often followed by rebounds. Cut unnecessary expenses, especially if you work in sectors tied to government spending. And most importantly, stay informed. Economic uncertainty can be intimidating, but knowledge turns it into opportunity. Every government shutdown is temporary, but its lessons are lasting. It reminds us that financial security isn't just about earning more, it's about preparing smarter. Whether it's your paycheck, your mortgage, or your retirement, you have the power to stay one step ahead of uncertainty. If you found this video helpful, give it a thumbs up, subscribe to Asset Bloom, and share it with someone who needs clarity in this chaos. Because in a world of financial noise, we help you make sound decisions. See you in the next video.